My name is Frederick, and I'm a co-founder of Price Drama with Moses, and trying to bring price transparency to Africa. So when you go to pricedrama.com, you can see that we are in 6 countries. What is the use of an idea without investment? I don't know. You want to know? And I also want to know, right? I'm going to do it a bit differently. I'm going to ask about 2 people that have a presentation to do it, and then after that, we'll actually go into the details. So I would ask Sylvia to make a presentation.
Thank you. So, hi, I'm Sylvia from the BMZ, which is the German Ministry of Economic Cooperation and Development. And I heard someone say earlier that now Africa is on the map. And I think my colleagues at the ministry would be very sad to hear this, because for us, Africa has been on the map for a long time. Our ministry has existed since 1961, and we've been working with Africa and on Africa since then. What is true, though, is that with the Agenda 2030, with the adoption of the agenda in 2015, the discussion got new impetus. And it's been a very healthy process, I would say, in our ministry, but beyond that, in our government, to think, how do we implement this and what does this actually mean? So we look to promote investment for sustainable economic growth in Africa, and we've heard a lot of business pitches today and direct possibilities for financing. We are maybe 1 or 2 steps removed from that, so we think, how can we best use the means that we have for developing countries, ODA means, to foster investment. And our goals in this are clear. We want job creation on the ground, and we want resource mobilization for green and inclusive growth in Africa. And we all know the challenges. Some countries have crisis and conflict, some have, or all of us have issues with climate change, there's lack of due process, etc. So what's been happening over the past few years is that we took a closer look as how can we use our means even better to foster growth in our partner countries. And for Africa, we started this discussion process within the ministry by saying, okay, there already is a very clear strategy for sustainable economic growth on the continent. It's called the Agenda 2063. So what can we do to support that? This is a pledge to democracy, the rule of law, and economic reform. What can we do? And so our minister thought big and said, what we need is something with the dimensions of what Germany had to support its economic growth in the past, something with the dimensions of a Marshall Plan. So there were a few theses that you can look up online that that are maybe not new, but we started discussing them in a far more intense way. And what happened is that we refocused on this 2-tiered approach. One of them is reform partnerships in Africa, so more substantial support for countries willing to reform, together with our international partners. And then the other part was, of course, we need an equitable regulatory framework for Africa, so fair trade, addressing tax avoidance and illicit financial flows. And then what happened was, fortunately, we had the good luck of having the G20 presidency last year, and the discussion gained momentum in parallel in the whole of government, and Africa became a big priority in the G20. So here you see Angela Merkel and we decided to, the government decided to go into more depth with our G20 partners as to what the international community can do to foster investment in Africa. And Chancellor Merkel personally called for more investment, and so our ministry participate in that through the reform partnerships with Tunisia, Cote d'Ivoire, and Ghana that we've already started discussing on, and that are meant to deepen this discussion as to how we can have a better framework for investment in African countries. So of course, as we've heard many times today, in order to do that, we need financing. And I think none of us are under any illusion that official development assistance is going to be sufficient. So what we need to do is to find a way to focus on our resources on gathering other resources. So one thing is domestic resource mobilization, tax resources, etc. And the other avenue is, of course, private investment. So the big discussions that we're having at the moment is how can we use our means to get those avenues to explore them further and to get more private investment on the continent. And I don't want to take up too much of your time, but some of the ideas we are looking to deepen that are not new, but the conversation around them is really starting to gain strength and depth, is we need more and better support for a strong business investment climate in our partner countries. We need to support the development of bankable projects, and of course we need support for a strong and sustainable private sector, and in particular SMEs, but also those types of companies that can have a high impact on the ground, like BOP, base of the pyramid models. And we've heard quite a few of them today that have the potential to really reach the last mile, as we say. So we're looking at this from different sides. One of them is financing. One of them is working with partners on the technical cooperation side. And I'm happy to go into more detail if there's interest. And then finally, we need new and better ideas on how to mobilize private capital for small and medium enterprises and also for startups. And so one thing we are looking into more deeply as well is to support financial sector development and capital market development. Also new and improved approaches to risk minimization, from guarantees to local currency financing. We also need to find ways to work with local investors and new investors, such as African pension funds, to draw this capital in and make it usable for the private sector in Africa. And finally, we need to foster partnerships and work with partners to get new ideas. And this is really where I have to thank Afrolynk for inviting us and inviting me today, because I've already received so many new and interesting inputs, and I think these types of exchanges are essential for us to not just work in our little government ivory tower, but really get input from the ground, what is needed, what is useful, and where do we need to go with our development cooperation. Thank you.
Thank you. Silva here is a policy advisor at the German Ministry of Economic Cooperation and Development.
Sorry, I thought it was...
We have Eric, who is a partner at Verod Capital, a private equity firm.
So I'm a partner at Verod Capital Management. I'm going to try to be very quick. Verod Capital is a private equity firm based in Lagos, Nigeria. We invest across West Africa. Currently have about $250 million in the management. Have made about 18 investments since inception. some of the tech-oriented businesses we've invested in or been involved in the past include CSCS, which is the providing technology for clearing and settlement on the Nigerian Stock Exchange. Spinlet was a music streaming app, and Vanso was a financial services player that just recently got acquired by Interswitch, a large Nigerian card payments provider. But with Verad Capital, we invest in more established businesses. But what I do, I spend a decent part of my time actually mentoring startup businesses and young people in the entrepreneurial community across West Africa, because I strongly feel that creates Africa itself we need a pipeline to get to where I can get to in terms of investing in larger businesses itself. Just a brief landscape on Africa, an investment landscape in Africa. I think Africa is actually the best place to be. It's the best continent to be in today, and that's why I'm there. We have 30 million people in the last year. By 2050, the population of Africa would have doubled to about 2.5 billion people. I think after Asia, we're definitely the largest continent in the world. I think we're growing faster than any other place in the world in terms of from rural communities to urban communities. So urbanization is growing at an incredibly fast rate. Additional, in the next, by the next 10 years or so, about 200 million people will migrate to urban cities across Africa. Smartphone penetration is also growing. They expect to reach about 50% by 2020. Mobile phone penetration also, about close to 50% of the population in Africa have mobile phones, which creates, of course, a big platform to develop products and services for them. And of course, rising income levels across the continent. In the last few years, there's been a lot of activity in terms of startups and tech businesses across the continent. Numbers of Kenya, Nigeria, and South Africa, of course, take the lead in those transactions. And we see an increase in those transactions actually in the next few years. I get called by various investors across the world looking for great deals, and I increasingly see Silicon Valley looking to invest more and more in Africa, and investors across Europe. So that's a growing trend where I think a few years ago, I didn't sitting in Nigeria and looking at businesses across, I didn't see that much interest, but that interest seems to be growing at a rapid pace. Fintech seems to be the most popular sector, so most of the deals we've seen, the larger deals we've seen across the region, seem to be fintech deals. Vanso is a business where we were involved in, and also a fintech player was recently acquired. Just a list of some of the key names here. Andela, Flutterwave are companies that we've probably heard of, and have gotten huge investments in recent times. I've also been part of those businesses from a mentorship perspective and for some of the co-founders. Yeah, the list goes on. In terms of my mentoring, what I've seen it takes to be successful, of course, focus on business. I find that some entrepreneurs, especially starting up a business in Africa, they tend to want to start 2 or 3 businesses at the same time, or be involved in 2 or 3 different businesses at the same time. I think that's the quickest way to fail. So if you started a business or involved in a startup, it's always great to have focus on what you're doing in that business itself. A strong team is also a big plus. Being able to adapt to change. I think I've rarely seen a business that started off doing something and actually in 3 or 4 years, we're still doing the same exact thing they plan to do. So be always willing to adapt to changes and also the opportunities that exist. And I think one of the greatest things in starting a business or in startups and tech businesses across the continent is just on the local knowledge, having that local understanding how the market operates. I tell people it's drastically different doing business in Kenya than it is in Nigeria. And understanding those nuances, I think, it's a great key to success. Thank you.
Thank you, Eric. I'd like to introduce the other panelists. I have Eric Young, who's a co-founder and CEO of GreenTech. I have Heike Radges, who is the head of development and impact finance at the European Investment Bank. And then I have Ludovic Santos, who is the social project director at Orange. Now, I read something quite interesting, that the average startup in Europe gets about $15,000 from friends and family. After 3 months of launching, they get about $200,000. And then after 6 months, they get $2 million from venture capitalists. Is this true for African startups? I'm going to pose this question to my panelists, and we'll actually find out how to get that 2 million. But before that, Eric Young, is social impact a myth or a reality?
So I think first that I would like to know this startup was getting like from every 6 months from money to money. But I think that I think to answer your question, I think it's more commitment. The commitment is the answer to your question. If you believe that the greater good can come through innovation, and that those companies are any entrepreneur that can be in this room or outside, and you think that you want to be part of it, what I believe is a chance, then you have to believe in social entrepreneurship. So for me, it's not a myth, as I see that in different countries in Africa, you have great entrepreneurs that those local problems and also interact with the population, solve solutions, and that they are just lacking the possibility to duplicate that. I think that this also is a good proof that social entrepreneurship, and it's very important, is existing, is concrete, and that's why you have impact investors. And today, you can see that this goes now with revenue creation, profit. Now it's no more, there is no more difference between social investment and classic investment. You can really marry both, and it can be very quite good for the community, I guess.
I pose the same question to Ludovic.
What is the question?
Is social impact a myth or reality?
Well, when you talk to, in my experience with African entrepreneurs, a lot of them are a little bit surprised about this social thing. It comes from the north for them. They say if you become an entrepreneur in Africa, you already do a lot of social things, because behind you, many people will leave, your family, your relatives, your neighborhood, you will help a lot of people just by being a successful entrepreneur. And it's already a very social activity. Aside that, Africa is, there is many Africa. I mean, there is many countries and many different countries, so it's always difficult to say Africa, but you have many countries where you are facing quite small markets, and you are more in a configuration where entrepreneurs are really based off the pyramid entrepreneurs. They want to push a service, or they want to push a product, and they are facing a really large bunch of population with very few incomes, and if they want to address them, they have to be really based off the pyramid, in a based off pyramid strategy. And therefore, for us in the north, we already said, wow, it's a social approach. For them, it's no choice. I mean, it's if they want to create their activity and they want to do the job, they really need to deal with the reality of the field and the ground, and the reality of people in society around them.
Thank you. We cannot talk about social impact without mentioning base of the pyramid. A report by the International Finance Corporation, that is a subsidiary of the World Bank, estimates the BOP market to be 5 trillion USD, which I think is 1/3 of the European Union GDP in 2016. Is the base of the pyramid profitable?
I would say yes, and that's what we as EIB are trying to promote with other partners. We were endowed by a special envelope by our member states, who are our shareholders, as we are the EU bank, to push more private sector investment, especially for the bottom of the pyramid, and that's where we launched the an impact financing envelope, which is a special window for us for private sector investment, addressing indeed investments for, which are supposed to create impact on the bottom of the pyramid. I think what is crucial then in that sense is that we look at the actual impact we can create. So we have to measure the actual results we can generate with the investments we promote. And that's how initiatives, for example, like Boost Africa, which we launched together with the African Development Bank, really try to encourage startups in Africa in order to get more innovation off the ground, which ultimately have an impact on this bottom of the pyramid. So we believe, yes, it can be done, and it can be done in a sustainable way. But institutions like ours have to do some front-loading work and combine it in a comprehensive manner with a lot of capacity building for the ecosystem so that it can be done.
Yeah. You're speaking as a rep from an investment bank. Eric, you. I was going to say the one with glasses, but I realized, I mean, they all have glasses. Is the BOP market, which is estimated to be 4 billion people globally, is it profitable? And would you encourage anyone to go into it?
I think the approach, the BOP market is definitely profitable, but the approach should be very different. Because if you look at a startup or a social startup here in Europe who wants to solve a problem in Europe, they will tend to try to find an idea or of a problem was in a process of development, and where the market is in the future. And I think one of the speakers mentioned it today, is that the difference with Africa is that the problem is now. So on the BOP market, when you solve the problem for 10 people, and you really solve the problem, you can bet that there is 100 or 1 million other person that can buy your model. That means that if your model is profitable for 10%, and then you can structure it with a certain parameter, a certain knowledge, and this is where comes the capacity building. Then the market is profitable. That's why, and this is the specificity of the base of the pyramid.
Thank you. I have 2 questions. I'll start with Eric. I think you actually touched on it briefly, but why should anyone invest in Africa?
Why should anyone invest? That's an interesting question. So, you often hear Africa as the last frontier. I strongly believe it is. But just to touch on kind of some of the questions, the previous questions you asked. Africa is less developed than most other continents in the world. We all know that. And I don't think the government in Africa is actually well equipped, or it's the right. I don't think the government can actually solve the problems of Africa. The problems of Africa can be solved by businesses itself. I think it was Michael Porter that said businesses acting as businesses are the best solutions to society's problems. And we strongly believe that. So that creates a massive opportunity for investing in Africa, because in the developed world, you have a lot of problems that have been solved by governments, etc. But you have a blank slate in Africa where you can come in from the bottom of the pyramid up, and there's just still a lot to be done. Lumos, for example, which is a company that spoke earlier, light, electricity, it's just something that didn't exist before. But if you find ways to create things that are common basic necessities, I mean, opportunities are endless. So you can create opportunities like that, and I can name 1,000 more where those opportunities can be created. I don't think a Lumos would work very well in London or in Berlin today, but it works very well in Africa. So they just, that is a place to be in terms of what opportunities you can find and what can actually be developed.
Why should someone invest in Africa?
I guess to rephrase it, right? You should invest in Africa. Biggest reasons, the opportunities are there, where you can find them nowhere else. That's one of the biggest reasons. The second reason, the social impact aspect is also there. In investing in Africa, like we said, those businesses can actually help drive change in developing the continent itself.
Silva, do you want to follow it up on why someone or a company should invest in Africa?
Well, I think my answer would be the same, that the opportunities are huge. But for us, the problem or the question is not just why should someone invest in Africa, but how will people at the base of the pyramid profit from that? So when we look at this issue of how to foster business model at the base of the pyramids, at the base of the pyramid, we look at it from two sides. One is, how can we support scaling up the business models that might already be out there, the ideas might be out there, but they're facing systemic constraints from financing to capacity that stops them from becoming the next M-Pesa or the next Jain irrigation, to take an example from India. And the other is, what can we do to maybe transport the business models that are maybe a little bit less innovative now because they're already out there, but how can we make sure that they're being replicated in markets that are ripe for them? So,
I want to give the opportunity to the audience. So this is not a question. Why do you think a business should invest in Africa? We have two people that want to support us. In just 1 minute. Yes?
Yeah, I think there are many reasons why people, or like companies should invest in Africa. First of all, the primary reason is there's opportunity to make money in Africa. So people, they can wind around or something, but, there's an opportunity to make good money in Africa if you invest. So also, there are also opportunities which are also available in the sense that here in Europe, there's already, you really need, there's already probably a startup doing something that you already, want to do. So that one, you really have to be the best, here. But in Africa, when you're coming right now, we don't have that. So, there's a lot of room, for you, probably to fail a little bit or, with your startup and still, be able, to be the market leader if you are the first, of course. So I think those opportunities are there, and it's really a good reason. And also the impact, in which, it creates as well, in the people in Africa that you invest. And there are a lot of job opportunities created, from that kind of investment.
Okay.
So impact.
Thank you.
Yep.
Someone wants to make a very good case for Africa? Okay, Sama? This is a selfie speech.
In addition to what others have said, I think it's actually quite cheaper to fail in Africa than in other continents. If you want to do a startup here, you probably need hundreds of thousands of dollars to make the impact. Whereas in Africa, you don't need too much resources to start, and if you fail, you actually don't feel the impact like somebody who fail in Europe or in the West.
Someone is shaking the head.
No, yes, it is, because you don't need too much capital, like comparatively. If you are like starting in Europe, you need millions probably to make the impact. Whereas in Africa, you don't always need millions to start a business and to create the right impact.
Okay, thank you. I think there's so much interest in this. People want to make a case. Yes, the one with the baby. You don't have to stand. I think you can sit. Oh, okay. 1 minute.
It gives me great opportunity to pass on the burden. Yeah. I choose to differ with the colleague here because I think the margin of failure is constant regardless. I mean, we say we invest 500,000 euros in a small startup in Europe. But if we compare 500,000 million is a state investment in Africa, not private. This is a complete difference. 1 euro is not 1 euro in Africa. And we shouldn't just look at investment as a, to scoop profits. We need to look at investment in a way of what I guess the whole day, because of this young guy, we were not here at the right time.
Okay.
We have
Thank
reason
you.
to blame someone. Just a second.
A second has passed.
We are not in the investment of profitability. We're in the investment of human investment. When we live here in Europe so many years and we see our brothers and sisters who are going through that Mediterranean and come to Berlin only to end up in the park to deal whatever they deal, then we ask ourselves, are we making the right investments?
Okay, thank you. Someone here? Quick. 30 seconds.
Right. I would just add, as an investor, you will have a positive, you will create a positive feedback to the state itself. You do help to formalize economies that at the moment are very informal, and so you create a market for your own, for yourself as an investor.
Okay, last one. 30 seconds.
So for having living in 15 years in Senegal and West Africa, I can tell you that investing in Africa, let's take cultural industry. Well, when you think Hollywood doesn't have much to invent anymore, everything was said, except for biopics in movies. Look, all the stories in Africa that have not been told yet. So let's invest in cultural industry in Africa.
Okay, thank you. I mean, I think the message is very clear over there. That it's not a question of why. It's a question of when. When do you go to Africa? What are the key challenges in African startups? I'm actually putting this in the African context. What are the key challenges for African startups in assessing finance or investment?
Well, I think one thing which is pretty clear is access to finance, of course, and we have been talking about that quite a lot today. So we have to look into that, but that is not the only solution. I think we need both. There is a lot of advisory support, capacity building that is also needed, and that's why I think any concept which, when we really want to change the environment, has to be as comprehensive as possible and combine the two. There has to be access to finance and appropriate finance as well. If we put the hurdle too high, and I think there the example presented by DG is very good. You start very small and then you can accompany a startup as it grows along and according to its needs, and provide also an appropriate capacity building all along, which may be in the beginning a feasibility study, a marketing study, and at a later stage some support on the financial engineering side also. So it's really a tailor-made approach which is needed at all stages and which has to be as comprehensive as possible.
Okay, I'm going to move to Eric Idiahi. Same question, but a bit twisted. You're coming from an equity finance company, and you are more of a VC or equity? You're in the middle. Okay, in just kind of about 3 points, what will you be looking for from a startup to be able to get investment from you? And then the same question goes to Eric, who's in the middle. What you will be looking for? Because I think there are a couple here that are trying to get the requirement of actually getting money or investment.
So I think I look at probably 200-300 companies every year.
both established and also from startups who want funding personally, etc. One of the key things for me, actually the key thing for me is the people. You're investing in people when you invest in businesses. You can have a great idea, but if you have the wrong people, then you don't have a business. So number one is the person, the attitude of the people, or the ability of people to actually execute. So you have to gauge that. That's one. Two, yeah, I think the idea just, like I said earlier in my presentation, I've never seen an idea that was conceived from start and remained the same idea. So I think no matter what the idea is, does it make sense? Yes. Do you think these people are also, going back to the people, are they able to adapt if they come across different obstacles? If you think they are, then that's another big factor in investing. Then also, for me personally, I look at also what kind of impact does it have. If it does have a good impact in society, yes. If it doesn't, if it's something that maybe depletes, affects the environment in one way or the other, or it's not good for, it's not good for society in general, it's something I don't do.
Like when we do invest, the first thing that we like is an idea that is simple. Because we can very quickly see the value into it. That's the first thing. Because of course, like every investors, we look at the people, we look at the idea, the market, etc., etc. But the problem with the startup is not so much money, it's the time. Like everybody mentioned earlier, is that you have a moment where you need to raise money, you have a moment where you have to do this, etc., etc. And even if you raise 1 million, at some point, this million is going to disappear. It is like this. This is the start of life. So when your model is simple and then the value that you create can be captured by the market, that means the user experience can be better and easier. For me, it's already a very good sign that it's worth to look at the business model. Now, when it comes to Africa, I really believe that the best ideas comes from local people because they have to find solutions for what they're living every day. And they are their own customer, and they are millions. So as an investor, I want to be sure that somebody mastered the problematic of the users. And if he masters it, it will make it simpler, it will make it efficient. And then this is where I say I'm a little bit in the middle. I know that a lot of investment organizations are using due diligence to eliminate some companies and say, okay, this is not okay, this is not okay, this is not okay. I do have another perspective where I believe that if we do that in Africa, we reject a lot of companies that could be potentially good and very efficient. What we try to do is, as Heike mentioned, is that we try to focus also on the capacity building. So when we identify the due diligence, we also identify what are the weakest points of the team so that we can help the team actually have a better perspective, but a global perspective, what was mentioned before by Cenzo Capital, have also a better team, because even if you identify that you need a better team and you're a startup in Africa, well, if you call somebody here to say, come and work in Africa in my startup, I doubt that this works so easily as if you were here in Europe. So I think that the combination of simple ideas, good team, all this is important. And if we invest in Africa, then we have also to take in consideration the environment and the fact that they need another support than only the funding.
Okay, good. I'm coming back to you. Just think about it. What social impact ideas, one or two, can you recommend for the audience here? So think about it. I'll come back to you. One or two social impact ideas you can actually recommend to the audience here. If you have any questions, and please, it's a question, go straight to the point.
Hi, my name is Ellie. I have actually two questions. One is more on the moral side, and this goes to Mrs. Hare and Mr. Idiai. What do you think, private equity in Africa, value creation or value extraction? Because we often have this debate in Germany that private capital or private companies which are invested in Africa go there, try to scale up the company so they can sell it. Even now, of course, also in combination with the Marshall Plan and the concept paper for G20, with the backing of development institutions like the BMZ or GIZ. The second question is, how would you, Mr. Idiaye, convince a very conservative German private equity fund manager to invest in your African fund, bearing in mind currency devaluation and problems with legal property? Thank you.
To the first question about private capital, I think one of the statements I said earlier, which I strongly believe in, is that the problems for African solution is the private sector that's going to solve it. So we need to actually encourage more private investors to come. If they bring their money in, like I'm in private equity, I don't stay in businesses more than 5. My goal is to invest in a business and exit within 5 to 7 years. But my capital works for the business itself and the community in general when I create employment, when I invest in a business. Or if a foreigner comes in and invests in a business, somebody from Germany invests in a private business in Nigeria or Ghana or Kenya, they're creating employment and they're actually helping grow a business in Africa in that sense. So I think it's a good thing. I think more and more private capital should come. We need to actually run businesses in a profitable way in Africa, and that's the only way the continent is going to develop. I think free capital or charitable capital is not going to do us any good in the long run, because we're not going to develop as a continent if we keep getting that. On the second question on how do I convince foreign investors to come into German investors, I think 80% of my funds actually come from Europe and America, or 80 to 90% of my funds. Yes, it's a challenge, currency depreciation, etc. But what we do in just some of the things we do to give people comfort in looking at transactions and evaluating opportunities, we try to, so for example, looking at Nigeria, we know that the currency might depreciate, or we estimate the currency might depreciate about 10% a year. So in investing in the business, we factor that depreciation in and assure investors that even with that depreciation, we can achieve the returns that they require. That's one thing. And I think more and more countries across Africa are getting a bit more sophisticated. We're creating hedging instruments to hedge for currencies, hedge for dollar or euro investment going in.
Thank you. I can only second what you said on African solutions. I think the problem of value creation versus value extraction is one that we're very aware of, and one that we have a lot of discussions about in the ministry, because there's also while the notion of working together with the private sector is not new, there's always a healthy dose of skepticism of who works out of what motive and in what interests. And I think our job is to figure out in the Venn diagram of business interest and development interest, where is the sweet spot, where is the overlap. And that's a discussion that we have that is ongoing and that we have a lot. And I think one important part of it is we cannot forget the environment we work in and the political setup. So we need to also empower our partners on the government side to make sure that they have the framework to create a private sector that is positive for their people and for the base of the pyramid there, so that they have inclusive growth and not just growth.
I'll take a question from here, this side. Yep.
I already have the microphone though. On this side, but I have the microphone. Can I talk nevertheless?
Okay, okay,
All right, thanks. Actually, I partially disagree with Eric Idiai that it's about the private sector to solve all the challenges. I believe in an entrepreneurial state, and I believe the DEG, but other instruments are great mechanisms for that. So what I would like to know from the rest of the panel, what is the advice you give to entrepreneurs in formulating policy demands? Because this is, I think, is a really important role of an entrepreneur.
Yes, I would fully share your view as well. I think there are actually two things which need to be done. I mean, we were talking about the policy environment, but I fully agree with you. If there is no advice coming from the private sector, what is actually needed, the policymakers will stay in their ivory tower and not really know what is needed. Second, so there has to be a lot of exchange. Policymakers need to listen to the private sector, what is actually needed. And that's where institutions like ours, try to come in to create that bridge and pass on the messages we get from the private sector with whom we interact on a daily basis. I think also another factor which we haven't probably mentioned, but which I consider also crucial and where we have been really trying to work and to enhance what we do in that area is de-risking. I think we as development finance institutions have to really bring also our contribution to the table in de-risking investment in Africa, so it's to attract more private investors. And that is with schemes we have been developing, and I don't know when you plan to show our little video, which I brought along on Boost Africa, but that would give you an idea of what we have been working on, and I must say it was a process like we felt sometimes with the AFDB also like a startup when we started to work on this initiative, Boost Africa, is that we really wanted to go an extra mile and enter a space which normally DFIs do not enter, because we feel that there is a role for us to do this front loading in order to encourage the private investor to come in.
Okay. After this one, after this we take a short commercial break.
Actually, we are a large company operating in 18 African countries. We are investing €1 billion every year in Africa, but usually the branch we open in Africa are not 100% owned by us, but it's a mix of capital between state and private, other private partner and us. 99% of the population working in the branch are local people. The general and CEO of the African branch are mostly African guys, very skilled. They were needed this investment. They asked for it. Some of the money fly back in Europe. That's the game. But most of the value stay there. And for instance, if you take a telco operation like Orange in Senegal, you have something like 6% of the GDP. We are weighting almost 6% of the GDP locally, and 15% of the state revenue is coming from the tax we pay to the state. So we are a big contributor of the local economy. Plus we bring digital, so digital is really bringing a lot of value to the economy and help the economy to grow. And finally, in our way of thinking our responsibility and engagement, we decide to help the private sector to grow with many different initiatives. We build incubators, local VC funds, and I just want to come back in these local VC funds. We call them local because it's by country, and their particularity is really to give very small tickets from 75 to 300,000 euros. in capitals to help the very small startup or SMEs to really grow and to bridge the gap to access bigger funds like these guys here. What is important when we do that is the way we do it, and this is the same for incubator. We bring partners from the public sector, we bring partners from the private sector, and from the civil society as well. And we try to build a governance with all these different parties, and also we try to gather the fund locally and by all the partners contributing to the fund. And with this type of operations, I would say, we share the risk, we involve everybody, and we give responsibility to everybody to really do something about the development of SMEs and private sector, with the most important, I would say, tools to raise human capital, to struggle against unemployment, and also to bring innovation in the country. So it's by this type of initiative that a private sector company with foreign capital that come in the country and can disseminate a lot of initiatives which are good and create a lot of local value, and it's something that needs to be encouraged, even if part of the capital again is flying back somewhere else. Not the capital part of the revenue is flying back somewhere else. It's very important to have partner investment that create local values and share this value with the people, the state, and so on.
Yeah, thank you.
Okay.
We will do it improvised way.
West Africa is a joint initiative between the...
So I'm just going to put the microphone close to this. We're having a bit of sound issues, so please bear with us.
The European investment.
Jambo sana, jambo. Visitors. Jambo sana. Welcome, fam.
Everything is yours here. Does your land go here? Is the boundary here?
Yeah, boundary near fence.
Well, West Africa is a joint initiative between the African Development Bank, the European Investment Bank, the European Commission, that aims to create an investment facility that will invest in funds that focus on the very early stages of the venture segment.
It's only that collaboration, this partnership that enabled us to go into such a small companies and impact the social and all those sectors that we couldn't touch directly with our normal and classic ways of financing.
So there, what are you planting here?
Hapa ninapanda ile waelezea hapa ninapanda ile inaitwa pilipili kali nishapanda mbele huku hii sehemu imebakia.
The key belief behind Boost Africa is that technology can really improve life of everyone, even the poorest people on this continent.
Alafu kupitia teknolojia tumepata pia pesa kupitia simu ambayo imekuja kwa sababu ya teknolojia. Manake nimesema hapo awali ya kwamba si kwenda kupanga poleni kwa line ya bank ati ndio nipate pesa. Mambo ya teknolojia tu imefanya pesa ikanifikia hapa nilipo.
Think about the smallholder farmers who live in the remote areas. These are farmers that are hugely underbanked and unbanked, so they would not have any credit history. They don't own land, so they cannot use land as collateral. But it does not mean that smallholder farmers are not good borrowers. And that's how we ended up building a solution that collects data on smallholder farmers from the farmers themselves, simply using a mobile phone and incorporating all that in our model that crunches all this data to generate a credit profile that the financial institutions then use to make lending decisions.
We found Farm Drive to really stand out because of a couple of reasons. They are founded by two ladies who are coming from a farmer background, so they really understand the problems of the farmers very well. They're both computer scientists, so they understand technology, and because of that, they've really developed superior technology to some of the other companies that we've seen.
We've seen a farmer today who had access to loans because of technology. And this kind of investment, the bank couldn't do it by itself.
So together we want to boost Africa.
We want to boost jobs for everybody, women, men, youth, and want to boost education, want to boost health, e-health for everybody, and we want to boost e-farmers so that they can grow and get out of poverty.
Thank you very much. I'll just take one last question, and then we close. I think we are quite far. Yes.
My question is going to Sylvia concerning BMZ. It's like I've noticed that in BMZ they have been talking a lot about supporting the private sector, and especially in the politics, especially in this case with the Marshall Plan with Africa. So I would like to know how you actually support this private sector, because I don't really see a lot of, I see a lot of talking going on, especially on TV, but actually the actions, I don't really see them. I'm sorry, but I'd like to see how you people really unfold your plans with the Marshall Plan with Africa.
So now you've opened the floodgates. No, to make it as quick as possible, and I'm happy to follow up with you, but there's two big ways that we do this. One is we work through the GIZ on developing the private sector on the ground, which means projects that will work on, for instance, business development services, trainings for entrepreneurs, either for new startups or for established SMEs, etc. We will work with government partners, or the GIZ will work with government partners to advise them how to, for instance, have a good strategy to foster an ecosystem that will lead to more startups being supported and more and SMEs growing. So that's one big avenue, and the other one is financing and financial cooperation. So credits to local banks that have a little bit, credits and other financial instruments that have a little bit better conditions than the ones they could get on the market, so that they in turn can provide more capital for SMEs. So these are, in a very rough way, the two big avenues, and I'm happy to go into further detail and send you a lot of information, because we do have a lot of this is online, so if you're interested in what is happening in a particular country, you can always go also on the website of our implementing organizations, GIZ and KfW, and they will have, for every project and for every country, they have fact sheets that are usually around 2 pages long that will also give you more information about what they're doing on the ground.
Thank you. A business idea and investment, which one is more important? When you find the answers, you can send me a message. Thank you very much, panelists. We appreciate you coming. And since Afrolynk is result-oriented, I hope that next year we'll have startups here raising 200,000, 500,000, and $2 million USD. Thank you.